Hey, Dustin Tibbetts with jazzwealth.com. Do me a favor, if you haven't had a moment, check out our website, check out our portfolios, check out our reviews from our customers, check out our classes that we offer our customers. Go to jazzwealth.com, take a look around. If you have a retirement account, you're just looking for some help, you want somebody to manage it for you, you don't know what you're doing, but you want somebody you can trust that's a fiduciary, check us out at jazzwealth.com. Let me know what you think. You can also schedule a time to talk with me directly there. So let me know if you want to chat. I'm happy to help. Today, I want to put some things into perspective for you. I'm going to start by drawing a simple diagram. We're going to talk about a couple things. Tell me on this chart right here, if you could buy a car, this is the price, this is a more discounted price. Where on this chart do you want to buy the car? Do you want to buy the car for the highest possible value or a lower value? Think about it. Let's pretend it's a boat. Where on this chart do you want to buy the boat? Do you have any idea? I know where I want to buy it. What about a house? What about a shirt? Right? What about a vacation? Where on this chart do you want to buy most things in your life? Right down there, right? We don't want to pay top dollar. We want a discount. We want to get things for cheaper than what is perceived to be its value, right? That's the whole goal in life. That's why you always hear people, you go to sell your car or something. I know this because I'm trying to sell my wife's car. You go to sell the car, the guy comes up, he's like, well, this is a beautiful car. Why are you selling it? And you go, well, you know, we're trying to scale back, whatever. And then the guy goes, what's the lowest you'll take for it, right? Stupidest question ever, by the way. But what is the lowest you can get a product for? Now, let's change this around. We know that you want a discount on everything you buy in life. But what about the stock market? Right? What about your retirement? What about your investments that are in your retirement accounts? Where do you want to buy them? Now, to be fair, chalk everywhere. Now, to be fair, the stock market does this over time. Where are you trying to buy the stock market? Every one of you are trying to buy at a discount. But the problem, there's a really big problem here with the stock market is we don't actually know where these little dips are going to be. We have no idea where the markets are going to end up falling. And so what happens is, of course you want to buy at a discount. Everybody wants to buy investments cheaper. But when you buy, you have to let your existing investments lose value. That's where people get stuck. Now what I'm going to do real quick, I'm going to actually draw the economic cycle. It looks something like this. You know what the economic cycle is? This is like economics 101. You have a peak. Oops, you have a peak. You have a trough. And you have a recovery. And I'll just put, that'll be it. Okay? And then the cycle repeats itself. That's the economic cycle. By the way, that is also the way the stock market moves. What do you notice about that, though? The troughs, of course, we'd want to buy at those troughs. We haven't seen one of those in a while on the stock market. But, of course, we want the more discounted prices. But what happens? Let's say you end up buying at the lowest possible price, all right, in this little decline right here. And you get into you start your investing. And then the markets go higher. They pull back. You get excited because there's a discount, but you also get nervous because this position that you started is now losing value. Who knows if it loses all of its value or a little bit of it or, you know, whatever. But now you're sort of mixed because you want to buy the decline, but your positions are going down in the meantime. So your account value reaches some point, and then all of a sudden we reach that next point in the stock market cycle, economic cycle, it comes down. So you're torn, and this is going to happen, I promise you. You're going to be like, well, Dustin says I should be excited when the markets go down, and I am excited, but look at my account value, it's dropping. Oh my God, I feel so bad. Go back and look on social media with a lot of these financial companies. When the stock market starts to fall, all of a sudden, people bash their company that they're using online, and that's because they're not educated about it. Nobody taught them that that's okay, the markets can fall, don't worry about it. So you have to fight this temptation to want to close out positions while you buy, and that's going to happen. I'm telling you, all of you just getting started here with us at Jazz Wealth, you're buying not at a trough, but you're buying as an initial investment. And at some point, the markets will fall. You're going to get a little nervous. I'm telling you not to worry, because what we notice is over the long run, look, this is the trend in the market. This is what you can expect overall. You have to enjoy the waves up, get all excited, and yay, all right, things are easy. Then you have to get nervous on the way down, but you got to dive in and you got to keep buying. Now, these drops, this window here, these declines, what can you expect out of that? We did a study and we shared it with all of our customers, and I'll give you some of it. The study showed that since 1987, the stock market has 10% or more corrections. When it has those 10% or greater drops, when the markets fall, it averages 168 days, meaning it falls in this mode right here for 168 days on average. Sometimes less, sometimes more. Go back to February, that only lasted 12 days. That was ridiculous. That has never happened. That was the only time that's ever happened. If you go back to 1950, then 196 days. So this is 196 days, let's say. 196 days. Do you have more than 196 days to invest? Of course you do, right? You know that when those fall now, you can go, okay, average of 196 days that the market's going to fall. It could be somewhere within that range. It might be 168, like we talked about. But you know that that's a part of the game. So I've got to get everybody understanding this. I preach this to our customers all the time, because in order to see opportunity, you have to eliminate fear, right? You are going to be fearful about making the next step, but we've got to push that aside so that you could see the opportunity. When the markets fall, I need you to trust your investments. All of our customers trust our investments, because I tell them all the time, we can't wake up and see this all go to zero. We don't invest in some speculative thing that can just disappear. So we trust our investments. We trust the allocation of those investments. And now when the markets fall, we trust the statistics of what we know about the market. No opinion, just what we know about the market. Now, if you have more than 10 years until retirement, you want that to happen right now. You want this to start happening, right? You want to start buying at that discount. Again, you're going to see the value of your account drop a little bit. It's going to happen. It's inevitable. It's unavoidable. It's going to happen. But if you can sort of see through that and you can buy that dip, then that next go around, you're going to be really happy, because the markets recover 100% of every decline it's ever had, 100% of the time. I never want you to forget that. That's like my first real saying here since doing this here with you guys. So it's really, really important. It's true and it's pure fact. So if you started investing in the year 2000, to prove it, you have gains in your portfolio. If you invested correctly, let's say it that way. If you invested in 2008, scary times, you have gains in your portfolio. 2010, during the flash crash, that was only one day, but if you invested then, you have gains in your portfolio. 2012, 13, 14, 15, 16, 17. If you invested in any of that window or even further back, you have gains in your portfolio. Why? Because over time, everything works out. Now, my prediction is that after the summer, things are going to get a little rough. Could we be heading into that next trough? I don't know. I'm just, I like to kind of keep my head out there and see what's going on. So I think that it's a real possibility. Now, in order to have your mind right through that pullback, number one, you got to know your account value will drop. It's part of it. You have to know that you got to push through that and buy that dip. Don't try to guess the bottom. Buy that dip. The next thing you have to do is have your dough straight. And I say this all the time because if this economic pullback, let's say there is one, and the markets come back as well, then you lose your job, you get scaled back at work, all of a sudden your credit lines start lowering, all of a sudden money's a little tighter. If that happens, you got to have your dough straight. You got to have your emergency funds and everything. Now, some of our customers are already starting to test out Nest Egg and see how they can see their emergency funds, how they should pay off debt, and what's a more advantageous way to do it. I'm really excited about that. So I will leave you with that. Keep your mind right. You want to buy low, but remember your account value will drop during that time. Totally cool. Nothing wrong with it. Don't try to time the market. Try to play the market when it gives you these opportunities. Don't be fearful. Walk right through it. You know you can do it. If you have any questions, if you need any help with that, if it's something that makes you nervous and you want more information, what can I do to elaborate on this? Do you want more statistics? Do you want more sort of classes for our customers that help you understand this? I have one thing in mind. It's actually on its way that I plan on sending to any customer that wants it to try to help you with this. It's funny. It's not like some serious thing. You know me. It's like, it's really laid back. It's sort of a joke, but it'll help you think. The markets recover 100% of every decline in history 100% of the time. And if you can remember that, then when you see on TV that Italy sneezed and the markets fell, then big deal. You're going to laugh at that, right? So stay tuned. I will share that with you guys soon. If you do me a favor, if you like anything I've shared with you on this channel, hit the subscribe button. I would love for you to do that. Also, hit the bell. You'll get notified every time we go live, which is at 1 o'clock on weekdays Eastern Time and 4 o'clock Eastern Time. Thanks so much. We'll talk to you soon.